Meanwhile, the time for you to resume repaying your student loans is right around the corner. After 3 years of holds, repayments begin again in a couple of weeks, but now without some changes. SNN's Marco Lamano spoke to an expert on student loan debt about these changes and what you can expect.
October is right around the corner when those payments are due.
After student loan payments were paused under the 2020 CARES Act and continued under President Biden, student loans are now set to continue in August. But with the new SAVE plan created by Mr. Biden's Department of Education, Leslie Tain of Tain Law Group says many borrowers will see big shifts in what they're paying.
It could give you the opportunity to not only reduce the payments significantly, but even get them down to zero.
The new plan is geared toward lower and middle income borrowers. The income exemption increased from 150% to 225% above the poverty line. So what does that mean? It means if you make $50,000 a year and your family size is 2, you could pay $47 a month. The bigger the family, the lower the payment. However, if you're of high income, you're not likely to see as big of a savings. Those making $60,000 living alone would make an estimated payment of $227 a month. Other changes under the SAVE plan: spousal income is now excluded if you're married and file separately. In July 2024, payments on undergraduate loans will decrease from 10% to 5% of income above 225% of the poverty line. This only applies to federal loans, not private loans.
If they just don't remember how they got it, how to tell if their loan is actually federal or something private?
Under the federal loan, there was no requirement to make payment under the CARES Act, which came about during the COVID-19 pandemic. Private student loans, on the other hand, did not follow suit. So if you were pursued by a student loan company, it's likely that that was a private loan.
The information is on the government's website, studentaid.gov, but Tain recommends calling your loan servicer.
Make sure you have your income available and you have your maybe a W-2 available or your tax return.
Make sure it's the same servicer you had 3 years ago.
Some have been consolidated or eliminated. Your servicer might have changed. It's important to make sure they have updated information on you, that you have the appropriate access to the portal where the servicer is.
And get on this early.
My office alone is receiving tons of calls about the federal student loans. So you can imagine what the servicers are going to be facing. Be proactive about that and your own advocate.
Reporting from Sarasota, Marco Lamano, SNN, the Suncoast News Network.
Now remember, if you co-sign on a Parent Plus loan for the student and the borrower doesn't pay, you'll be responsible. For more detailed information on the SAVE plan, you can go to our website, sntv.com, check out Marco's story, and it'll be in there.